back to the Legacy Radio Network. This is Everything Financial Radio. We have the pleasure today of talking with Mr. Peter Schiff, CEO of Euro-Pacific Precious Metals as well as Euro-Pacific Capital. He is also the host of the Peter Schiff Show, heard daily from 10 to noon. Peter, we're talking about really all this dishonest money and the potential inflation that will be created. What, in your opinion, is the likelihood that some country in the world stops this madness by returning to some form of a gold standard or some form of real money, if you will?
Well, eventually, everybody's going to go back to real money. Fiat money doesn't work. It's never worked. This is the largest global experiment in fiat money we've ever had, and it is an abysmal failure. If you look at the record of the global economies when we had gold money, we did much better. Certainly the United States, the U.S. economy in the 19th century grew much more rapidly than it did during the 20th. Living standards rose to a much greater degree when we had a gold standard. And in fact, then if you look at the first half of the 20th century versus the second half, we abandoned the gold standard completely in 1971. And so we did much better during the first half of that century when we were on a form of a gold standard, not as pure a form as we were on during the 19th century, but at least we had some gold standard. But ever since we went off it completely, the Fed has been an engine for inflation, and we're now on the precipice of a complete economic implosion because of the fiat monetary system. That's the reason that we're $16.5 trillion in debt. That's the reason that we have $50 trillion of unfunded liabilities. The country is broke because we have paper money. If we had real money, the government never would have been able to run up these big deficits. It would have been impossible. And so we'd have a much smaller government, and therefore we'd have a far more vibrant and more prosperous economy.
Peter, you mentioned the deficit. The recent fiscal cliff deal really did nothing to address the deficit. In fact, it raised taxes on every working American, in spite of the fact that there was talk about the necessity of a balanced approach to addressing the deficit problem. But we ended up with spending increases as well as tax increases, business as usual. Is there ever any hope that Washington gets this right?
Well, I don't think they're going to get it right until there's a crisis that forces them to maybe get it right. And even then, they'll be very reluctant to do anything right. They're going to try to do what's politically expedient. But unfortunately, that's what got us into this mess. And, you mentioned they talk about a balanced approach. They might have talked about it, but there was no balance because there was no spending cuts. All they did is raise taxes on 1% of the population. That's not going to do it. I mean, if you're going to try to tackle the deficit with tax hikes, you need much bigger tax hikes that affect the middle class. But unfortunately, the record of Congress, when you get a tax hike, they don't use it to reduce the deficit. They just spend that money in addition to everything else, and the deficit keeps getting bigger. The only proven way to reduce the deficit is to cut government spending, but nobody will do that.
Peter, when one looks at the cost of the Social Security program and the Medicare program compared to tax receipts, the conclusion is obvious. We have a math problem, not a political problem, and these programs are going to blow up if major changes are not made. Why, in your view, are we not seeing politicians seriously address this, and what will be the outcome if they continue to just turn a blind eye to these entitlement programs?
Well, look, the entitlement programs are Ponzi schemes. I keep hearing politicians talking about, we can fix them, we can just modestly reform them, we can, have people, 10 years from now retire 1 year later or 2 years later. None of these tiny things are going to make a difference. The programs are insolvent. They were flawed from inception in the way they were designed. They can't work. They're Ponzi schemes. And the way a Ponzi scheme works is some people come in early, and they do okay because they make money from all the people that come later on who lose a fortune, right? So if you get in at the beginning of a Ponzi scheme, you can do pretty good, but your gains are equal to losses of everybody who comes later on. Well, the people who got into Social Security early, the people who started collecting it in the 50s and 60s and 70s, they made off like bandits. They collected far more than they put in. But the only reason the early recipients were able to make good is because the later generations are going to get wiped out. And so that's basically where we are now. We're at the tail end of the Ponzi scheme. People my age, people your age, can't get anything. It's impossible. It doesn't work. It didn't work for Bernie Madoff, and it's not going to work for the Social Security Administration. So what we need is politicians to acknowledge the foolhardiness of this ridiculous program and find a way to radically transform it so we can transition ourselves out of it.
You know, Peter, there's a debt limit fight approaching, and I read an article this week that I can't believe they're seriously thinking about it. I'm sure you saw it. There's talk in Washington about minting a $1 trillion coin, which would essentially create money out of thin air in order to keep Washington operating. What are the chances that this actually happens? And is the fact that this is even being discussed evidence of how desperate our fiscal situation has become?
Yeah, I don't know if we'll actually do it or not. My guess is that the gutless Republicans will cave in and we're going to raise the debt ceiling, and so the idea of the platinum coin will be moot. But I think it does shine a light on what we're doing, because basically that's all we're doing anyway, is we're creating money out of thin air. The only difference is the government issues a bond that the Federal Reserve buys and creates the money. So there's not much difference between that and minting the coin. The only difference is the pretense. When the government is selling its debt, there's the perception that it's not just creating money out of thin air, because theoretically it owes money to the Federal Reserve. The Federal Reserve has an asset in a U.S. government bond, whereas if they just mint the platinum coin, the Fed's not going to have any asset at all, and the money is just going to come into circulation. But that's really all we're doing anyway, because the Federal Reserve's treasuries don't really amount to a real asset. It's money the government owes itself. So the whole thing is a fiction. And I think just minting these coins will simply let the world know the game that we're playing. It shines a light of truth on what we're doing. And we're just creating money out of thin air, just like a banana republic would do. And as a result, we're going to face a similar fate if we keep doing it.
Peter, we talk about the Federal Reserve printing money. In your view, given the current economic situation, what would be a more appropriate policy response to get the economy going and deal with these debt excesses?
Well, in order to deal with the debt, we've got to dramatically cut spending. And those big spending cuts would also help get the economy going. Because whatever money the government spends is money that the private sector can't invest, the money the private sector can't use to grow the economy. I mean, if you believe in big government and you want government to spend a lot of money, then you basically believe that socialism works. You believe that economies will prosper to the extent that the government takes money out of the private sector and spends it. But that doesn't work. Every country that's tried to grow their economy through government spending has collapsed in failure. Right? The countries that succeed are the countries that limit the size of government, where they leave as much money as possible in the private sector, where it can be invested efficiently and productively to make our lives better. So we actually kill two birds with one stone if we slash government spending. We get rid of the deficit and we improve the economy. But also what we can do to improve the economy that won't cost the government any revenue is to just get rid of a lot of the rules and regulations that make American business so unproductive and inefficient. These rules and regulations don't contribute any revenues to the government, but they impose an enormous burden on the private sector.
Peter, in the time we have left, I'd like to have you give us your thoughts on a few different markets. Given the current money printing, does that make you bullish on stocks, or are you bearish on stocks?
No, well, in a nominal sense, of course, it makes me bullish, because as we print money and money loses value, prices go up. So it's not just the price of gasoline that's going to go up or the price of food. The price of stocks will go up too. So, yeah, I mean, it's hard to be bearish nominally on stocks when the Fed is creating all this money. But in real terms, which is really what counts, I am not bullish. I am bearish. I think that the price of the stock market, if you measure it in terms of gold, is going to fall. And in fact, if you look at the stock market priced in gold for the past 13 years, it's fallen by like 75%. So we have this stealth bear market in stocks, but you don't see it unless you're looking at it through the prism of gold. If you're fooled and you're using the fiat currency that the government is debasing, you might think the market has gone up, but in reality it's gone down. But, certainly Americans can see their standard of living declining because, again, despite the fact that the CPI isn't registering inflation, the inflation is there nonetheless, eroding away the value of the typical American's wages and his savings. So I advise my clients, if they want to get out of the dollar, not only buy gold and silver, if you want to be in stocks, buy foreign stocks, in countries that don't have these massive macroeconomic imbalances that aren't going to wipe out their currencies. And, where you have better valuations, where you have less government, less debt, and there's good dividends that you can get by investing in stocks in other countries.
Peter, give us your forecast for gold moving ahead.
The forecast is higher, much, much higher, especially in terms of U.S. currency. I don't think gold will go up as much in terms of other fiat currencies, although I think it will likely go up in terms of all currencies. But I think the degree to which gold goes up in dollars will be enormous. And so certainly Americans need to buy gold, need to buy silver. That's why I set up my Euro-Pacific Precious Metals. People can get information at shiftgold.com. And it's very important that you buy your gold and silver through a reputable company like mine. The vast majority of gold and silver companies out there are ripping people off. It's unfortunate. They're charging markups that are insane, 50, 60, 70, 100%. In fact, I've got a free report. Anybody who's thinking about buying gold should download it. You go to goldscams.com, and it's a free report, and it basically goes over all the most popular scams that the major gold companies that are advertising on TV and radio use to rip off their customers. So you'll know what the scams are, and you'll be able to look out for them in case somebody tries to, rip you off with one of them.
Peter, give us your forecast for U.S. government bonds moving ahead. Given that Europe is hanging on by a thread, many analysts have said that we're going to see a short-term bull market in U.S. government bonds followed by a massive bear market. Would you concur with that assessment?
Well, we've already had a massive bull market. In fact, at this point, it's in the manic stage. This is the end of a 30-year or so bull market in bonds. It might have already topped. I mean, although, probably the trading pits are full of the bodies of people who tried to call the top in the bond market over the past several years. I believe that there is a top here somewhere. Maybe we've already seen it. It's impossible to tell. But there's a lot of air in this bubble. The bond bubble is bigger than the real estate bubble and the stock market bubble combined. And when that bubble bursts, the damage for the economy, the collateral damage, will be far greater than what we had in 2008. So I would not want to own U.S. Treasuries. You can try to short them. You got to be disciplined. But eventually the bottom's going to drop out of the market, and bond prices are going to implode, and yields are going to skyrocket.
Peter, we have about a minute left. When you look around the world, are there any countries that are getting it right fiscally, that we're going to see solid economic growth in those areas?
Yeah, well, no countries are getting it perfect, but certainly there are many countries that are not making as many mistakes as we are. And those are the types of countries that I look for at my brokerage firm. When we buy stocks and bonds, we try to buy in the countries that are making the fewest mistakes, that have the soundest economies, that have the smallest government as a percentage of their economies, that have trade surpluses, budget surpluses, not deficits the way we do. They don't have big populations living on Social Security and Medicare. They have productive populations that work, and they have high savings rates. I think one of the important things to look at is countries where people actually save money, not where they just spend everything they earn and then some using a credit card. If you invest in countries that are getting it right, like America used to, way back when we became a rich country, we were doing it right. I'm trying to find countries that have more in common with America of the past than America of the present.
Well, Peter Schiff, thank you for joining us today. We hope you'll come back.
Hey, sure, anytime.
All right, Everything Financial Radio will return after these words. Stay with us.